Hello everyone! Today we're going to talk about Bitcoin, which has fully met the previous forecast 100%. Back then, I said that 115,000 to 116,000 is the target growth zone. And here, a decision might be made about whether the upward movement will continue, or if we will go down. And there's also a pretty clear level to the downside, and why we might go there. That's the 200-day moving average. But let's take it step by step. When I was expecting growth to the area of $115,000, I assumed it would happen. After a drop to around 108,000, then up to 115, and then down to 103. But it didn't happen quite like that. First we went not to 108, but to 115. Then we went to 103 and back to 115 again. How can we interpret this movement? Look, we see a huge, massive drop. Then Bitcoin starts swinging around like this. Well, let me zoom out a bit. In other words, it starts getting really volatile. So, when I expected that we would first drop to 108, then to 115, and then to 103, it actually happened a bit differently. We didn't go to 108, we went straight to 115. So that's this impulsive bounce. Then we went to 103, and that was also just as impulsive. Now we're back at 115 again, and this return to 115 is, let's say, the point of maximum stress. And now that it's passed, it's quite possible that we're starting to follow my scenario, where there was a point at 115, 115. Maybe I'll draw it a bit messily. Assuming that now we might see a decline, somewhere down here to the area of 103,000, with a possible update or test. This minimum is just an assumption, and it's one way to analyze the market, to reason about it, but it's not effective. In reality, you need to forget about all this. You can make assumptions, explain why things happen one way or another. Yes, we should simply rely on the hard facts, what is present in the market and where the probability of success is higher than the probability of failure. Now let's delete absolutely everything and start drawing and marking things up from scratch. We have daily candles. What do we have here? First, yesterday closed. Let me even zoom in on this. Below the 100-day moving average, but above the 50-day moving average. I told you that we might see a scenario where the price of Bitcoin moves like this between the 200-day moving average and, for example, the 100-day moving average. That's why we can't rule out the possibility or the fact that Bitcoin, after such a rapid rise, even updating this high from October 13th, it could head towards the 200-day moving average. This is a possible scenario. If we see a close above this level, let's take a look at it. Let's turn on the magnet tool. This level here is the highest close, October 13th. Let's make it white so it stands out. If Bitcoin closes today or tomorrow above 115,166, that will be a pretty strong signal for further upward movement, but there are two levels here. The first level is this one, $117,073, and the second level. I would note that the highest close is right here, which is almost at 117,400, so 117,000 to 117,500 looks like the target level for growth if the daily candle closes above 115,166. It doesn't matter if it's today, tomorrow, or some other day, at least in the current period. But if none of the candles can close, and moreover, if one of them closes below the 50-day moving average, then there is every chance we'll see a move right into this area. This can also be marked as a separate level. I would mark it by this red candle here. This is the area of the 200-day moving average, but also the area of this low. That's $108,200. So we have two possible scenarios that could play out. Moreover, if we move up to 117,500 and see a breakout of this level, then after that, with high probability, we'll see a new all-time high, and possibly an alt season. Why? Because we'll once again enter the zone of this sideways range, only this time we'll return and break through its lower boundary. If that happens. That is, if Bitcoin ends up here, then most likely it will see a new all-time high, and for us an alt season. That's how it looks at the moment. Let me emphasize if. This doesn't mean that we're going to start growing right now. In other words, if we move toward the 200-day moving average, that's a scenario that shifts the priorities toward a decline. Why? Because then, let me clear all my drawings again, then a pennant structure, as it's called, may start to form, which most often serves as a continuation pattern for the trend. That is, it could go straight down, or like this, and then down. So, if Bitcoin now heads toward the 200-day moving average, the chances of a further decline below these lows increase. Below $102,000, in my opinion, the chances will increase significantly. So either it needs to break through now, or there's a chance we'll see it. 100,000, 90, 80, and so on. But the stock market is currently rising, and it seems like everything is fine there. It's taking a while, but let's switch to the weekly candles. So here we just need to watch where and how Bitcoin closes. Let's go over it again. Will it break through this level of $115,166, and then we can draw conclusions? Or will it close below the 50-day moving average? Alright, now let's switch to the weekly candles. Let's look at the monthly ones. We have very little time left until the end of the month. And now is the perfect time to see what's happening for the month. And what's happening is that we have a candle of uncertainty. And such a candle suggests that we should probably look at what happened earlier. Earlier we had the August candle, which indicated a decline. Overall, the decline did occur. It happened down to an important reversal level. Look here, we have this situation. In January of this year, we reached a local high, after which there was a deep correction. We tested this level and saw a rebound from it. This means that, with high probability, based on the monthly candles, Bitcoin will continue to move upward despite this red August candle that hinted at a decline, which we actually saw. That's it, period. Here, the priority is upward. But against the backdrop of divergence, pay attention, I've said it 100 times, the highs are rising. The RSI highs are not rising. This is a very dangerous situation. So, from the perspective of monthly candles, you absolutely shouldn't buy Bitcoin here, no matter how tempting it may seem. A continuation of growth and an update of the all-time high. Let's switch to the weekly candles. On the weekly candles, the situation isn't great either. Look, high, high, high. Well, as zones, these are highs. RSI, look. 1, 2, 3. I'd even say like this. Let's put it back like this and here like this. So, with each new high, the RSI is getting lower and lower without returning to the 30 zone. That is, without entering the oversold zone. This indicates serious downside risks. Pay attention. We tested the 50-period moving average once, tested it twice, the third time we approached it but didn't touch it. This means that if it breaks, we could end up at this level. Right here. $80,000. Please be careful. Look, last week closed yesterday. A week of growth. But it didn't engulf this red one. And even if it had engulfed it, that's not a guarantee of growth. Why? Because this red week didn't update the low again. In other words, it didn't even set a new local low. And this means that this movement can be considered as a sideways trend. Yes, and if we do engulf this candle, then the target for growth automatically becomes the level of $123,500. Well, $123,480. Now let's look at the 4-hour candles. We can see on the 4-hour candles that Bitcoin has broken through all the moving averages. Look, it's above all the averages. This is a positive signal. It favors growth. Right now, we could see a pullback at least to the area of 114 to 114.5 thousand. Well, 114,200. This crossover of the moving averages, the 50 period and the 100 period, suggests that the growth will continue, that this high right here, this one, here it is. Here, that it will be updated, and if it is updated, it means that Bitcoin will rise higher. Most likely, there will even be some higher closes on the daily chart and the growth will continue, but for now, it's too early to talk about continued growth. We are at a decision point, and here we need to wait. What exactly do we need to wait for? I'll explain. The situation here is very simple. In a sense, we need to wait for either a retest of these moving averages or a retest of these moving averages. And after that, there will be some red candles here, of course. And we should see a bullish engulfing of the red candle. Here is the red candle that will do the testing. Let's remove the magnet, it's getting in our way. Either these two moving averages or these two moving averages. The green candle should engulf it, and after that you can go long. With a stop, of course, below the low of the green candle. Two setups for entering a long position. And if on the daily chart we see a close below the 50-day moving average, then you can try a short with a stop. Well, let's go back to the daily candles for a second, then you can take the daily chart now. Then you can take a short with a stop above the high of the candle that closes below the 50-day moving average. And in this case, your target levels will be the 200-day moving average as the first target and the 300-day as the second. That is, here you can move your position to break even. Here you can close it either fully or partially. Or here, close it fully or partially. Or possibly wait again for this area. But I want to emphasize the very fact that we will reach right here. Reaching the 200-day moving average will mean that the priorities are shifting significantly toward the decline. So it's either growth happening now, or most likely it will be a downward trend that will continue steadily down to $90,000, then to $80,000, and somewhere around those levels. Subscribe to the channel if you enjoy this kind of content. See you next time. The next review will be about the stock market. Most likely, it will be about the Nasdaq or Dow Jones Index. Goodbye.